They don't tell you how heavy 20 cases can feel until they all hit your inbox at once. It was April of 2021, pandemic still hanging in the air like static. Classroom training was technically over, but the truth was, I didn't feel ready. Nobody does. Not really. You study the internal revenue manual, memorize the interview flow, roleplay a few cases, and then one day your manager says, "You're ready." I logged in that morning and stared at a number I'll never forget. 20. 20 new audits, 20 set of tax returns, 20 stories I didn't know yet. At the time, I was working from the corner of my apartment, headset, laptop, a government-issued notepad, and the same coffee mug I'd used since college. The office had gone virtual months earlier. There was no cubicle chatter, no printers, no OJI hovering over my shoulder to check my notes. Just me, a blinking cursor, and the sound of my own heartbeat. Certified issue sheet where the charitable contributions were flagged. It looked harmless, a middle-income taxpayer, no business income, no dependents, just a Schedule A that raised a quiet eyebrow somewhere in the system. The return said they'd donated $12,000 that year. That number wasn't impossible, but it was unusual. Before I could even overthink it, my calendar reminder pinged. Initial interview 10 a.m. My OJI was supposed to join the call, walk me through the process, handle the tough parts. But 5 minutes before start time, my phone buzzed with a short Teams message. Double booked. You've got it. You're competent. Competent. That word echoed for a second. Competent doesn't mean confident. It doesn't mean calm. It means you can technically do it whether you're ready or not. So I took a breath, pulled up the case file, and hit join meeting. A few seconds later, I heard it. The static crackle of a voice on speakerphone. "Hello?" the taxpayer said. And just like that, my first audit began. I didn't know then that this case, the one about few too many donations, would teach me more about human behavior than any training ever could. If you've never done an IRS audit interview, it's a strange kind of conversation. You're not there to accuse, but you're not exactly there to reassure either. You start with small talk, confirm the taxpayer's name, address, the year under audit, and then you begin peeling back layers of paperwork that, on their end, might feel more like layers of their life. My OJI was still absent, so I was on my own. The taxpayer's voice came through my headset, polite, a little nervous. I introduced myself, gave the disclosure script almost word for word from the manual, and explained that the focus today was their charitable contributions. There was a pause, the kind of pause you can feel even through a phone line. Then they said, "Sure, I can talk about that. I tried to keep good records." Tried. That word became the theme of the day. Under IRS procedure, IRM 4.10.3, if you ever want the bedtime reading, the first step in a correspondence or field audit is fact gathering. You confirm what was claimed, what documents support it, and whether those records meet the substantiation rules. For contributions, that means receipts, bank statements, or written acknowledgments for anything over $250. Most taxpayers don't know those specifics. They assume a check image or a memory is good enough. It isn't. So I asked gently, "Do you have receipts or letters from the organizations confirming the donations?" They hesitated. Papers rustled in the background. Then, I had somewhere. The church moved buildings last year, and I think I lost a few boxes when I packed. But I definitely gave it. I could tell they believed that statement with their whole heart. And that's the hard part. Sincerity doesn't equal substantiation. I took notes in silence, letting them talk. They described bags of clothes dropped off at a thrift store, cash slipped into offering envelopes, and a handful of online donations they swore were on their bank statement somewhere. I asked for dates, amounts, and methods of payment. They guessed, rounded numbers, spoken estimates. Each sentence widened the gap between what they remembered and what the records would need to show. At one point they said, "You can call the pastor. He knows me." I smiled, though they couldn't see it. The IRS doesn't call pastors, it calls for paper. The code doesn't care who knows you, it cares what can be verified. I could feel their anxiety rising. I heard it in the speed of their voice, the way they over-explained each story trying to prove something that wasn't really in question. Their honesty. Honesty wasn't the issue. Documentation was. I remember glancing at the training materials tab on my screen just to ground myself. Those training materials are like an anchor when you're new. Pages of structured calm in a conversation that feels anything but. It told me what questions to ask, what not to promise, and how to phrase requests without implying judgment. So I followed it. I asked if they could send any copies of receipts or bank statements within 2 weeks. They agreed, apologizing for the mess. We wrapped up after 40 minutes, my first official taxpayer interview. I muted my mic, leaned back in my chair, and exhaled. Relief lasted about 5 seconds until I reopened the return. That's when I noticed a second schedule tucked behind the charitable contributions, miscellaneous deductions, gambling losses. Another potential issue. My stomach sank. The case was bigger than I thought. When I emailed my OJI to debrief, she replied hours later, "You did fine, just document everything." That line, "just document everything," is practically gospel in IRS culture. If it isn't written down, it didn't happen. So I did. I detailed every question, every pause, every number they quoted. It wasn't about covering myself, it was about accuracy. Because an audit record isn't just for the next agent, it's for history. If the taxpayer appeals, if counsel reviews it, that record becomes a story everyone else reads. Looking back, that first interview wasn't a disaster. It was a mirror. It showed me how thin the line is between compliance and confusion, between thinking you're following the rules and actually proving you did. And it taught me something else. I'd come to see again and again. Most audits don't start because someone's cheating. They start because someone assumed the IRS would see their good intentions the way they do. But the IRS doesn't audit intentions. It audits evidence. And that simple truth was about to make my first report a lot harder to write. When I hung up on that first interview, I sat there in silence for a long time. The kind of silence that isn't peaceful, just thick. I remember staring at the case file on my screen, the cursor blinking like it was asking, "So what now?" My OJI's message still sat unread in the corner of the screen. "You did fine, just document everything." I did, but what I really wanted to document was the feeling. That mix of empathy, discomfort, and something that felt like a lot of guilt. Because that taxpayer wasn't trying to lie. They were just unprepared. And I'd just learned what it felt like to be the person asking questions that made someone sound dishonest. That's one of the quiet truths about auditing. Most people aren't scheming masterminds. They're messy humans, overwhelmed, forgetful, busy, hopeful. They think their good intentions will count for something, but the system doesn't grade intentions. It grades evidence. When you first join the IRS, you're trained to separate emotion from examination. You follow the IRM, you quote the code sections, you stay professional. But sitting alone in a pandemic apartment with a headset on, it was hard to pretend that the voice on the other end wasn't another person just trying to make sense of an overwhelming process. I could hear their uncertainty in the pauses, the defensive edge when I asked for dates, the nervous laugh when I mentioned documentation requirements. At one point they said quietly, "I didn't know I'd have to prove being generous." That one hit me, because that's exactly what it felt like, as if they were being asked to justify kindness. Later that week, their packet arrived through secure email. A scatter of scanned receipts and cell phone photos, crumpled donation slips, screenshots of old emails from church treasurers, the kind of evidence you could tell was thrown together in a hurry. I opened each file, labeling them one by one, matching them to line items on the return. Every time I found one that actually matched, I felt relief, like a tiny win for both of us. It still wasn't enough. Out of $12,000 claimed, only about $2,500 could be verified. That meant the rest had to be adjusted down. Numbers don't care about stories, but stories are all people have. When you disallow a deduction, you're not just editing a line on a tax return. You're rewriting a moment in someone's year. The church service, the donation drive, the bag of clothes they handed over at Goodwill. To them, it's generosity. To the IRS, it's unsupported. The words mean the same thing to different people, but they live on opposite sides of the audit table. I sent the adjustment letter carefully worded neutral. Based on the information provided, the amount of charitable contributions has been reduced to substantiated totals. Cold, factual, impersonal, but I sat there rereading it thinking about the human translation. You tried to do something good, but you didn't keep the right proof, so it doesn't count. There's no line for that in the IRM. That case was small by IRS standards. No frauds, no penalties, no confrontation. But for me, it was enormous. It was the first time I realized how emotionally complex compliance work can be. You can be right by the book and still feel wrong in your gut. Later that year, I started keeping a personal note file, not about numbers, but about people. Little observations I'd jot down after closing a case, talked too fast when nervous, kept apologizing for not knowing the rules, laughed when scared. Those notes reminded me that behind every Form 1040 is a story. Sometimes that story is simple, sometimes it's heartbreaking. But it's never just data. Over time, I learned to balance it, to hold both realities at once, the obligation to enforce accuracy and the responsibility to see the person behind the spreadsheet. I stopped thinking of myself as a gatekeeper and started seeing myself as a translator. My job wasn't to punish misunderstanding, it was to interpret it, to help people understand how the system reads their lives in numbers. When I think back on that first case, I remember two sounds. The faint tremor in their voice when they said they'd lost the receipts, and the soft click of my keyboard when I typed my conclusion. Two sides of the same experience. One human, one bureaucratic, both true. That day, I stopped seeing audits as battles. I started seeing them as stories that had fallen out of order. Stories that just needed help lining up with the evidence. The IRS may not audit feelings, but I learned to pay attention to them anyway. Because they tell you something data never will. How much people want to do right, even when they don't know how. The next step was the paperwork, the analysis, the part where numbers either prove or unravel everything you've just heard. And that's where this case started to get complicated. Most people think auditing is confrontation. It isn't. It's reconstruction, taking a story that's fallen apart and rebuilding it line by line until it either stands or collapses. After the interview ended, I spent the next few days living inside that case file. My notes filled 3 screens, every transaction, every receipt, every email screenshot, sorted, labeled, cross-referenced. The taxpayer's year became a timeline of numbers, dates, amounts, check memos, a map of good intentions filtered through data. The Internal Revenue Manual, section 4.10.3.3, if you're curious, calls this verification of substantiation. It sounds dry, but it's where most audits are won or lost. You take what the taxpayer says, compare it to what exists, and see if the math tells the same story the person did. The return claimed $12,000 in charitable contributions. I started with the bank statements, a few checks to a local church, one to a national charity, several cash withdrawals, and even hundreds. It wasn't bad, but it was incomplete. No corresponding letters, no acknowledgement forms, no record of those goodwill drop-offs beyond a scribbled note that read donations. I highlighted everything that could count. That $50 check in March, the $300 ACH to a disaster relief fund in August, and built a simple Excel reconciliation. Verified, unverified, questionable. It looked like a forensic puzzle where half the pieces had faded with time. For the cash withdrawals, I could only note unsupported. Cash is the weakest form of proof. You can't trace it once it leaves the ATM. If there's no receipt or third-party record, the IRS treats it like it never happened. That rule feels cold, but it's what protects the system from guesswork. By the third day of review, I'd verified about $2,500 in legitimate gifts. That meant disallowing roughly 3/4 of the deduction. Not fraud, not malice, just missing paper. The actual report writing was its own ritual. Agents learned to write like lawyers, objective, precise, unemotional. The format was fixed. Facts, law, analysis, conclusion. Each paragraph a little wall against misunderstanding. I typed until the language felt balanced, factual enough to stand in an appeal, human enough not to sound cruel. Halfway through, I realized how different this felt from anything I'd studied. In training, audits were hypotheticals. Here, the numbers belonged to someone who trusted the system to be fair. Getting it right suddenly mattered in a way that went beyond accuracy. It was about integrity. Mine. So I checked everything twice, re-added totals, reviewed dates, made sure the disallowed amounts matched exactly what couldn't be verified. Because in an audit report, every number is a sentence in a story that someone else might have to read years later. When I submitted that draft to my OJI, I half expected red ink. Instead, she wrote one comment. Good work. Accurate, clear, balanced. That small sentence felt like a passing grade from a world that rarely hands out gold stars. Still, I couldn't shake the image of that taxpayer digging through boxes trying to recreate a year from memory. I imagined them reading my letter, seeing the adjustments, and feeling like they'd failed some test they never knew existed. That's what people outside the system don't see. Auditing is quiet work, but it has real echoes. A line you disallow in the morning might change someone's refund in the evening. It's why I stopped seeing numbers as neutral. They carry weight. They represent trust. I printed the final report for my records. Before uploading it, I read the last paragraph out loud to myself. Based on the documentation provided, charitable contributions have been adjusted to substantiated totals. It was sterile, but it was fair. And in this line of work, fair is the best you can offer. When the case closed in the system, the case disappeared from my inventory. No celebration, no congratulations, just one less file in the queue. But for me, that was the turning point. It meant I could handle the process from start to finish, not just by the book, but with a sentence of conscience. That night, long after I logged off, I kept thinking about how fragile accuracy is. One missing receipt and a story changes. One unchecked box and a refund vanishes. It made me see bookkeeping differently, not as busy work, but as self-protection. Proof isn't bureaucracy, it's a shield. That first case taught me how to find the truth inside numbers, not big picture truth, just the kind that stands up on paper. Because in the end, that's what the IRS relies on. Not emotion, not trust, paper. And sometimes paper is the only thing that protects both sides. I thought closing that case would bring a relief. Instead, it brought a restlessness I couldn't name. Because some cases end neatly in the system but stay unresolved in your mind. And this one was about to do exactly that. The file was closed. The case disappeared from my inventory. By all accounts, I'd done everything right. And yet, that night, I couldn't sleep. Every time I closed my eyes, I pictured the taxpayer's voice on that first call. The quiver when they realized memory wouldn't count as proof. I replayed it over and over, wondering if I could have said something differently, something softer, something that wouldn't make generosity sound like a math problem. People imagine audits as battles, government versus taxpayer, winner versus loser, but inside the system, most of it feels quieter. It's 10 p.m., the turn of a ceiling fan, and you asking yourself whether being technically correct is the same as being fair. That case wasn't dramatic. No fraud, no shouting, no courtroom ending. It was ordinary, and that's why it lingered. Because most of what the IRS sees is ordinary people who just didn't know the rules until it was too late. They're teachers, mechanics, Etsy sellers, retirees, all trying to be compliant in a language no one ever taught them. At the time, I was new enough to still believe the system worked cleanly, that if you followed procedure, the outcome would feel just. But the more I thought about that letter I sent, based on the information provided, the more I realized how much those words hide. They hide circumstance, they hide confusion, they hide the fact that sometimes the information was never there because the person didn't know they were supposed to keep it. I remember looking up Publication 526 again that night, rereading the lines about receipts, acknowledgments, qualified appraisals. Each sentence sounded sterile, detached, like a machine language built to prevent chaos. Necessary, yes, but impersonal. The human cost of compliance is rarely talked about. The stress, the embarrassment, the hours people spend digging through shoeboxes of receipts trying to reconstruct proof for something they already did. They call it substantiation. I started calling it financial archaeology. Around midnight, I wrote in my personal journal, not the official case file, just a single sentence. Accuracy without empathy isn't justice. I didn't know then that it would become a sort of compass for me, because in the months that followed, every audit, every cleanup case, every messy ledger would come back to that idea. That first case also taught me something about myself. I liked order. I liked answers that balanced, but I also needed meaning, a reason behind the rules. Without it, the work felt mechanical. With it, the work felt human. A week later, I got a voicemail from that taxpayer. They'd received the adjustment letter and wanted to thank me for being kind about it. They said, "I didn't know I needed that much proof. I do now." That call surprised me. Gratitude wasn't part of the training manual, but it reminded me that clarity can be a form of kindness too. When I listened to that voicemail, I realized something else. That was closure. For them, maybe, but also for me. The case that kept me up at night stopped feeling like a failure and started feeling like a first lesson, not in accounting, but in people. I'd later worked dozens of audits, businesses with missing books, self-employed contractors with chaotic ledgers, cash-heavy operations that smelled like trouble. Some would frustrate me, some would move me, but none would ever quite hit me like that first one, because that's the case that taught me about what the job really is. It's not about catching mistakes, it's about recognizing the story underneath them. In every return, there's a version of someone's life, where they worked, what they gave, how they lived. The IRS sees it in numbers. Agents learn to translate it back into behavior, and when you do that long enough, you stop judging people for the mess. You just start looking for the pattern that explains it. So yeah, that first audit kept me up at night, but not because of guilt, because of awareness, because it was the moment I realized the line between taxpayer and auditor is thinner than anyone thinks. We're all trying to reconcile something. Money, choices, mistakes, intentions. Some of us just do it with spreadsheets. If you've ever worried about getting audited, remember this. The IRS isn't hunting emotion. It's looking for evidence. Keep your proof. Keep it organized. But don't let fear keep you from being generous or from trying again. Mistakes can be fixed. Silence can't. Next time on Audit After Hours, we shift gears, a case where lifestyle didn't match the ledgers, fancy cars, big cash, and the red flags that practically waved themselves. We'll talk about what really catches an agent's eye, and how to make sure your books tell the same story your life does. I think about that first audit sometimes. The quiet phone call, the blinking cursor, the nervous taxpayer on the other end trying to explain a year of good intentions. What stands out now isn't the numbers, it's the humanity. The way people try to remember, justify, explain, all the ways we reach for understanding when paper can't tell the whole story. That's what Audit After Hours is really about. Not just the audit themselves, but the people in them, taxpayers, agents, bookkeepers, all doing their best to make sense of systems built on proof. Because behind every deduction and discrepancy, there's always a human reason it happened. And most of those reasons are more relatable than you'd think. I didn't know it then, but that first case would shape everything I do now. It's why I teach small business owners how to keep clean books, why I believe transparency beats perfection, and why I think understanding how the IRS actually sees your records is the best form of protection you'll ever have. So as you shut down for the night, maybe take a minute to look at your own records. Not with fear, but with curiosity. Every transaction tells a story. The question is whether that story matches what you remember. I'm Lauren, a former IRS agent turned bookkeeper, and this is Audit After Hours. Next week, cash cars and red flags, the case where lifestyle and ledgers didn't line up. You'll find out what really catches an agent's eye and how to make sure your books tell the same story your life does. Audit After Hours is a Zero Fluff Books production, written and hosted by me, Lauren Twitchell, a former IRS agent turned bookkeeper. This mini-series was created to pull back the curtain on what really happens inside small business audits, and to remind you that understanding your numbers isn't about fear, it's about freedom. Production support, editing, and the post-mix by Zero Fluff Books media team. For free resources, bookkeeping tools, and upcoming podcast updates, visit zerofluffbooks.com or find us on Facebook, Instagram, Pinterest, and YouTube at Zero Fluff Books. Thank you for spending this season with me, for listening, reflecting, and proving that the story behind the numbers always matter. Until next time, keep your books clean, your receipts handy, and your confidence high.